Hey Parker, thanks for jumping on with us. How are you today?
Doing great. How about you guys?
Can't complain.
Good.
Friday in sunny Florida.
It's gorgeous here. The sun is shining. How about where you're at?
Yes, I'm in Central Florida and the weather's nice today. It's a little cool, but we can't complain because we're going to be complaining about the heat for the rest of the year. So,
That's right. Wait, I said the exact same thing this morning. I'm like, man, I want this cold to be gone. And then I thought, then I'll be complaining about the heat. So Parker, tell us a little bit about yourself and a little bit about your lending career and something fun about you. Because Katie and I love fun.
love
So
fun.
we have to know
Okay.
what's fun.
All right. Well, I'm a Chattanooga, Tennessee native, and I have been in sales pretty much my whole life. Starting early 2002, I got into the car business. I was in the car business for several years. Ended up getting out, went into financing for mortgages. Ran a small office, about 3 loan officers and 4 processors there for about 5 years. And then, of course, the big dip came in '08, and I got back into the car business. So I just did about 16 years in the car business total and about 5 years in the financing. So um, my last position was running a Audi store as a general sales manager. So I've got all kinds of different backgrounds when it comes to sales and financing. And that's just kind of what I was growing up with. My dad was also a salesperson. So something fun about me, a lot of people don't know this, but I grew up on a lake and we surfed the lake. And you're like, how do you surf the lake? Well,
That's exactly what I was going to ask you.
we have these special boats that makes really big waves, wakeboard boats, and we get out there with our wakeboard boats and we surf on the lake all summer long, and that's what we love to do for fun growing up. So
Very cool.
That sounds like
Very
fun.
nice.
Sounds
That
like
sounds
a-
like a lot of fun. Sounds like,
was.
I bet you, do you like to kite surf?
I've looked into it since I've recently moved to Florida, and I tell you, I don't think I'm in that good a shape right now to do that.
It's pretty hard. I've tried it once.
Yeah.
It's a lot of core.
Did you see a
Looks like a
couple
lot.
of weeks ago, a guy got smacked into the Naples Pier doing that
No,
with what?
That's
Yep.
really
Yeah.
Well, I'm
uplifting
too old.
today.
I'm just
Too old to
saying,
get
it's
hurt.
dangerous. You have to be careful when it's windy.
Yes.
Very good. So Parker, tell us a little bit what KW Lens is, what we're Keller Williams, obviously that's what KW stands for. So when you work with Keller Williams agents, you get a little bit of extra benefits. I know this doesn't exactly have to do with building loans, and we'll get into that, but what are some extra benefits that our clients or our agents may get by working with Keller Williams lending opportunity?
Sure. Keller Williams is all about family. And that's why the relationship is real important for a Keller lender and a Keller agent to work together. And there is special pricing and stuff like that. But Keller Home Loans was recently bought out by Mutual of Omaha, probably about 3 years ago, I think, some in that time. And what they did is they didn't come in and like rip it apart. They just came in and improved it, right? So we have new structures, new platforms. We have new loan options to go through as far as secondary, non-qualifying mortgages, and then of course, everybody's got all the other stuff, right? I don't want to bore you with the products, but so they came out and, their focus right now is, you know, killer agents and killer lenders working together to be a streamlined process for the client. And that's pretty much what it is. Once we have better communication, we have products together, they all intertangle to give the client the best satisfaction and experience that they can. So that's why I like using Keller Williams myself, and that's why I'm a part of the team. When it came to me, I was like, yes, that sounds great. Great opportunity, and I knew we could grow together. So
It is really important, I think, Katie, that when we as agents have a very close relationship with the lender, it really helps the whole thing smooth, the whole transaction go more smoothly.
Exactly. So with our series, we're talking about building and new construction. So Parker, what types of new construction home loans do you guys offer?
Well, I'm glad you asked that because what Keller Home Loans offers is a one-time closed construction loan. And what this does is it makes it a seamless process from the beginning to the end, right? It's not, okay, I'm going to have to go get a land loan and then I'm going to have to go get a construction loan. Then I'm going to have to turn it into a permanent loan. And you have all these fees and costs involved. So with the one-time closed construction loan, what it offers is a streamlined process, of course, with the most cost-efficient way to do it. So during this, one-time closed construction loan, we qualify you, and it's really great. It's kind of unique for Keller Williams construction loans because we offer it for conventional, VA, and USDA.
Okay.
So you're
So,
telling me I
real
could walk
quick,
into a
Can you
home and
explain to
Yeah.
me what FHA, most people know what an FHA is, but can you kind of explain what a USDA is for me real quick, please?
Yeah, sure, sorry.
Oh, no, we're
USD
used to all those acronyms, but I want to make sure it's very clear.
Everybody,
Yeah.
someone's probably like, what is he talking about? Exactly. I forget sometimes that my language is lender talk. So so what we offer is 100% financing, all, VA loans, which is veteran military loans. And then USDA loan is a government loan for rural areas. What this means is it's not in a city limit. Usually it's, out there by itself, but there are some restrictions to it, of course, for the qualifications, but it does offer 100% financing. So it's unique that we can combine the land and the construction loan together and also offer that with the USDI option because a lot of lenders don't. So you can tell me that I can walk in, pretty much pick my land in a rural area development, not put any money down, qualify, and I can walk into a brand new construction home. Yes, you can. And that's great.
That is great. So how long do you have to do that? Because sometimes, you have delays. Finding the land can kind of be, you go under due diligence. Is it a good lot? Is it a bad lot? And then you have the construction, like what are your time limits on those? Or time?
Yeah, so that's a great question. So the best thing for a borrower to do is to get with a builder, such as Modern Home Builders or anybody that you guys do business with, right?
Mhm.
Because they will be able to guide you. Usually they have the land available. If not, like you want to go out in a USDA rural area, you still need a general contractor. You still need the builder because once we get the plot and we have to get the plans and the spec build plans and everything into our construction loan department, that can take anywhere from 30 to 90 days just to process that. So you kind of want to get ahead of the ball and start early. It's never too late to start early. So just getting that process started can take that long, definitely.
And then what about once they start building? What are the timeframes within building? Do you have limits to how long it could take? Does it take, 6 months, a year, 2 years? Before
Definitely.
you have to turn that into that permanent loan?
Yes. So what it is when we start, of course, with our one-time close construction loan, which all the realtors love this part, is we close up front and you get paid.
Mhm.
So everybody is like, great. And the builder gets, his scheduled payouts as he goes, as he passes inspections, stuff like that. It's really streamlined, makes it very easy for the builder to keep moving as long as inspections are being passed. So what that does is in the end, we usually put it around 9 to 10 months. So we give you an option, somewhere in there, we're going to have this complete, right?
Mm-hmm.
For the
And I
borrower,
guess your next question.
do they have like draws with your one-time buy, or is there anything they have to worry about, as a first-time building client, are they gonna have concerns with beyond just that first initial money down part? Since you close.
Right. Right. No, everything, once it's completed, like I said, and approved, it closes. We have a closing day. They don't have to worry about anything from that point. The builder is in contact with our company So that's where the draws come from, and there's a schedule for that. I've showed it to a builder before, and he said, that looks really well. It's not what I'm used to using, because it can become, a nuisance sometimes if you're wanting to draw and move forward, and you can't get it, right?
Now, with that, does the borrow have approval for the draws, or is that just between the bank and the
It's,
builder?
yeah, the builder will, request to draw.
Okay, and the home borrower do not have to approve those?
Well, I'm sure they're entwined somewhere in there, but really what it comes down to is once the inspection passes for that part, then you're going to move on to the next step.
Okay.
So it's really inspection process to release funds.
Now, do you have an approved builder list so that like the customer knows, hey, these are the builders we have to use your lending department? Or do you have, can they go find any builder and then reach out to you guys?
Yeah, so they can choose their builder as long as they're licensed, insurance bonded, all the good stuff that you normally have to be a builder in any state. As long as they meet those requirements, then yes, we're not going to limit to you who you can and can't use.
Perfect.
Perfect. So really, the time frame, once they find the lot, the builder, everything like that, you're looking at about 9 to 10 months and they can be in their home, but it's a one-time close right at the beginning. So they can sit back and kind of have a little bit of peace of mind, not having to worry about draws and things like that. That's all taken care of by you guys.
Yeah.
Great.
Yeah, that another really good quality thing about this loan is, what are the buyers going to have to pay during the loan, right? Is it an interest only loan right now? What's my payments going to look like? Well, with this one-time closed construction loan, there are no payments from the buyer. There is no interest occurring. So until the construction is completed, then that's when the payments start, scheduled payments start.
So,
Another good thing about that, I'm sorry, go ahead.
so can you say that again for me so I can make sure I understood that?
Yeah, so during the construction process, the
Yeah.
buyer does not have to make any payments and there's not any interest occurred. So
So
what that
during
means
the building process, you're saying, I don't pay anything, I don't pay interest. I mean, because that's a very unusual product. So I wanted to make sure that I was hearing you correctly. No interest payments, nothing until the home
That's
is
what I'm
built
saying.
and finished.
Right. And we will also lock into a market rate, right? So my concern that I hear a lot from people are what's going to happen if the rate's lower. So with this one-time closed construction loan, we will automatically float your rate down to the market rate, and we will only add an 1/8 of a point to it
That's great.
before
So,
closing.
come on, because this sounds pretty good. You just told us if we're in a rural area, we can we can buy a property, build a house with 0% down, minimal down if we're not in a rural area. We don't pay anything until our house is finished and you float our rates down. So what do I, as a borrower, need to worry about? Where are you gonna get me? Shall I say, because come on, where are you gonna get me?
I mean, the only thing that's going to get you during this process is time. It's going to take some time. If you can be patient and go through the process, and that's what you want to do. Because if you've ever built a home, it is time consuming and there is a lot of stress that goes along with it.
Oh, yeah.
Me
yeah.
personally, I have been an owner builder of my own home before, and I'm actually under one right now. So having this program to where you can continue to carry on with your daily life, not be affected by, any more occurring debts, have to worry about, different things happening around the house. You have a general contractor there to do all the work for you. So it just makes life a lot easier that way. And of course, I'm sure if you're like me, when I was building my first home, I was there every day to see anything that changed at all. And it was so exciting because all I had to do was just enjoy it.
Right,
great.
absolutely, very good.
Well, that product sounds great. I mean,
Yeah,
it's
that sounds
definitely
like an awesome
something
product.
that I think people should look into and would definitely want to call one of us and or call you to get it. Because again, that product's available mainly when you use, am I understanding that right? A Keller Williams agent, or do you guys offer that to any?
So this is a Keller Home Loans product.
Okay.
And is it, so I know when you say Keller Home Loans product, but you have to, do you have to work with a Keller Williams agent? Because at some point, and the reason Katie and I are asking that is before Mutual took over, you had to work with Keller Williams agents to get those benefits. So is it, what if I was just to borrow and my great friend was a Keller Williams agent, but I was not using an agent because I knew a personal GC? Would I still be able to get that?
Yes, so what we do, and also since we're DBA under Mutual Omaha, DBA, sorry, doing business as Mutual Omaha, you can get those benefits through Mutual Omaha as well.
Okay,
So if you're not a Keller Williams agent, I just flip over to my Mutual Omaha side and we underwrite it through Mutual of Omaha instead of doing it through Keller Home Loans.
Okay, perfect. So then it's
So
there.
it's available to anyone, not just Keller
Correct.
Williams.
Correct. We
No,
have,
is that- And I mean, I know we're in Southwest Florida, again, Sarasota, Charlotte, Lee, Collier counties, DeSoto. But do you offer that in all of Florida, number one? And number two, what about in the United States? Because
so
I have
yes,
family that's gonna be watching this in Pennsylvania, Delaware, Nebraska.
Yeah.
Do they have that available?
I think the only restriction states that we have would be New York, Massachusetts, and I want to say there's one other up there close to it, but I can't think of it right now, but there's
Well,
only three.
Basically, if
have
you're up
three.
in the Northeast, they're gonna have to call us for more details,
Yeah.
right?
Yes, because they have such weird, they have different restrictions.
Different.
States. It's just like Massachusetts, if you have a real estate contract, the attorneys negotiate it. So, you know, they have different laws and rules that we all have to abide by. But I am licensed in all the other states. We can do business in every state except the New York, the Massachusetts, in most parts,
Okay.
for some of the programs.
Perfect. Well,
Okay,
great. Well,
so-
Parker, I think
Is
I'm-
there,
I'm
that's all the
wowed by this. I'm
questions we
wowed.
have for you. Is there anything that we didn't ask you that you would want our clients that are watching who are thinking about building and they're gonna need a loan, that they would need to know?
Yes, so depending on the type of loan that you do is going to depend on, of course, the seller concessions, right? So
Okay.
say we're working with the builder and we have a construction loan and we're going to do a conventional structure loan. And we're only going to put less than 10% down. At that point, the seller can only contribute 3%. So let's say we go to an FHA loan, the seller can contribute 6%. Now, depending on how much money you put down, different programs and stuff like that, with conventional, you put more down, the seller can go more. And I guess the big question is, what can those funds be used for? Right, and they can be used for all different kinds of things like closing costs, third-party charges, different things like that, that a client can incur and a seller can help out on as well. So those are the things that, you know, you kind of have to keep in mind, what your options are, what's available to you that can help you out and get you the most cost-effective loan for yourself. So knowing a good realtor like yourself that can negotiate those options for the buyer is very important for the client.
Okay, so you said a couple things in there. Can you tell me, you mentioned monies could be used for a third party charges. What would a third party charge be?
Well, the third party, different things, you know, like I said, closing costs, points, they can contribute towards, you know, pretty much anything that is third party, to help
Like a
the buyer out.
survey would be considered third party, appraisals, those types of things,
Elevation
correct?
certificates.
Elevation certificates, all those would kind of be wrapped up into those third party fees, right?
Right.
Okay.
Yes, and
Right,
I'm
one of the
sorry.
things you didn't mention was the investors. There's also options for investors to build and make these wonderful brand new homes as rentals or however they want to do it. And I know there are different incentives and different concessions allowed for that as well.
Right, for investors, it's a max of 2%.
Now, let
On-
me ask you, your construction loan that you just talked about, is that available for second homes and for investors?
No, I don't believe so. You want to have this as a primary because it is going to be a new construction. So primary residence only,
Okay.
second homes, stuff like that. Normally are going to be a little bit different programs for you. But we do have those options available, as well.
So what would be an option if I were an investor?
An investor, right now we have a Keller Williams home loan, DSCR loan for investors. And pretty much what it is we have a pathway to success for wealth through real estate. And what we do is we can go in just as little as, first time investors are accepted with as little as anywhere from 20 to 25% down. Loan to value, like I said, usually 75% is what they look for up front. But the great thing about these investor loans is that it doesn't qualify the client as far as their income or anything like that, right? It qualifies through the property. So as long as you have a 10% higher income than what the payments are going to be versus, what's going out and coming in, rent versus payment, then it will cash flow.
Oh,
So
okay. So basically you're saying if we have because we could do a new build that the builder is building, I don't have to have a construction loan on it. I'm an investor, I can come in, let's just say my payment's gonna be $1,300 a month and my property is gonna rent for $1,400.
exactly. If you were an investor and you wanted to buy a new home construction that was already built, that had a certificate of occupancy, you could walk right in there with a DSCR loan as an investor loan and purchase that property. And that's where you would want to turn it into a long-term or short-term rental, but it's something that you're going to invest and hold on to for several years. Usually there's a prepayment penalty that comes with these loans. So depending on 1, 2, 3, up to 5 years, usually 3-year has really good pricing on the prepayment penalties, but these are definitely a buy and hold investment for investors.
Perfect. Anything else, Katie?
No, I think this is all great. And of course, if they need anything, they can give us a call, text, and email, and we can reach out to you and connect to them.
And
And
we'll get your information on there as well, Parker, and anything else you want to add?
No, it was very nice talking with you guys today, and hopefully that someone can learn something from this that will help them out in their next construction loan purchase, and possibly they'll do business with Keller Home Loans.
Excellent.
right,
Very
thank you
good.
so
Thanks,
much.
Parker. You have a great weekend.
Thank you. Y'all do the same.
thanks.
Peace, love, and
And
real
real
estate.